Now, Positively Ernie with Ernie Anastas, a New York TV legend and radio host with great positive stories and interviews.
Thanks, Ernie. You're the best.
And now, here's Ernie.
Hey, everybody. Welcome back to the show. Love to have you here. And, I just enjoy talking to my guests. I mean, it's an interesting experience for me as well, and I hope for you, because I have a chance to talk to people and ask questions that, I think that you would like to ask and find out something new. You can learn so many times by just asking the right questions. My whole career has been in journalism, and that's really what it all comes down to. Find out what's going on and ask the question. I got a great guest today. This guy has got terrific experience, over 30 years on Wall Street. A man that has, many titles, CEO and top roles in the field of world finance and investing. He's a good guy, and he's here today. Michael Purvis is here. Michael, how are you?
Great to be here, Ernie. Thank you for having me.
You got money in your pocket?
A little bit.
It's interesting to ask people sometimes, how much money do you have on you, especially in this world of today where everybody uses a card?
No, I know. The amount of $20 bills or $5 bills you have. $1 bills almost seem like a nuisance sometimes.
I know.
That's inflation for you.
And Michael, there are a lot of places that don't take cash.
Yeah, no, I know.
They don't take it.
I know. That actually raises some interesting questions as to whether we're going to a cashless society and everything's digital and, there's privacy issues and all that kind of stuff that are raised there.
Are we going there? What do you think?
I don't think so, and I hope we don't, certainly. But, you go to China. I think China's sort of cashless now, right? Mm-hmm. And so I think it does raise a lot of interesting questions about how much, whether it's Apple or the government or whoever, knows about what's really going on in your life.
But it becomes a real social issue as well, because there are a lot of people who say, you know what, I don't qualify, let's say, for credit card. I have to pay cash. Yeah. And, it's a form of discrimination in many ways that people raise the issue and say, hey, why are we going in that direction?
Yeah, no, absolutely. And I think the reality is that there's just, having cash, it just makes so many transactions just simpler and easier. I'm sure there's some people, in government someplace who would love to know exactly every single transaction I'm doing. But then again, that gets back to privacy and potential government overreach, which would be, I think, problematic. So I think the idea of going cashless sort of sounds cool. And I think for a lot of younger people out there, maybe, who needs cash? I look at my own kids. They're they're like, set me up on Apple Pay. I don't need, don't give me a couple of 20s if I need to go out and, go to Chick-fil-A or whatever, and so I think I think we're going to stay with cash. I don't know if it's going to be back to the way it was when you and I were kids, but I don't think we're going to zero cash.
It's an interesting discussion because, you talk about things that are going by the wayside. Kids in school, for example, are not doing any script writing anymore. Yeah. I mean, they don't even know how to read it.
Yeah.
Can't even read, historical documents anymore. And I'm wondering if we're going to get to a point where we have this cashless society where no one will know what a $5 bill is,
Yeah, no, I mean,
2 cents.
It's kind of amazing. Look, it's funny. I will say, Ernie, that I have 4 kids. One of them's just finished 5th grade. One of them's just finished 8th grade. Both of them had penmanship classes. That's old school. But that is the exception that proves your rule.
Yeah.
There. Yeah. No. I think. Look. I think with respect to I think again. I think cash is going to be here to stay. I just don't think it's going to be used in large scale volumes.
Keep an eye on it.
Yeah, no, it's something to keep an eye on.
I read a survey not too long ago. 33% of Americans feel financially insecure.
Yeah.
What do you think of that?
Well, I think it's very understandable, right? We've had a huge inflation surge over the last 3 or 4 years for all sorts of different reasons. Some of them have to do with the central bank. Some of them had to do with COVID and supply shock. Some of them had to do with higher oil prices. And some of them had to do with too much fiscal stimulus during COVID. They kind of shot the bazooka and then shot it again and then shot it again.
Yeah, sure.
There. So a lot of that stuff is easing. And I think inflation is one of those macroeconomic factors that is very unnerving to everyone, right? Because it's something, you can go out and you can work your job and you can sort of feel like you're controlling your own destiny, right? But when you go into the store and you got to pay $8 a gallon for milk or $4.50 for gasoline or whatever it is, that's something you can't control. Right. But you need milk, you need gasoline, you know, and so forth. You need to make a mortgage payment, but maybe at higher interest rates there. And so you tend to sort of, you know, like, oh my God, that's not, I'm doing my part, but this big thing out there in the ether, the government, et cetera, whatever, I can't control it, and it's very destabilizing. You know, when you can when you have a sense of when inflation is low and stable, I'm going to guess that consumer sentiment and this financial anxiety that you're discussing in this survey will be in a better place.
Yeah. So it begs the next question. That is, what do we do? I mean, you know, what advice, you know, do you give people who are struggling to pay their bills, who are adding up a lot of debt, and for a lot of people, and I've done stories on this, they can't even think about retirement. Yeah, they can't even think about it, and they're making adjustments. A lot of young people are living with their parents again. Yeah. And there's that kind of, you know, cohabitation that's at least giving them some relief temporarily until they get their feet on the ground or figure out what's next.
Yeah, I mean, look, I think part of that issue is when you're faced with higher costs for all these things, it's understandable that if people want to go out and they want to, you know, do all these things they couldn't do during the COVID period, there, you know, you've seen like airfares are still like at, you know, like the airlines are just booked at record levels here. You know, the 4th of July bookings I was just observing were like highest ever on record. There's people are going out there and they're doing things. They are, and I think there's a little bit of a catch up because there were, you know, we couldn't do stuff we wanted to do for 2.5 years or whatever it was. And that actually, that sort of pent up demand is one of the things that's keeping a lot of these prices higher. That will ultimately wear off. But for the young person who's trying to make a you know, a paycheck you know, square at the end of the month, and by the way, I've got two 23-year-olds who are just embarking on their careers, and so I'm very sensitive.
So what
to
advice
this.
do you give them?
Well, I say, you know, look, you know, you're young. You don't get just because you know, like you may have been. Don't think you get to live like a 45-year-old when you're 23, right? There, you know, in other words, you have to be very. Don't go to the fancy restaurants, right? You don't, you know, go on a cheap vacation, not a, you don't need to go to Tokyo and to Paris. There, you can save that, right? Like, I think when you and I were younger, we didn't have all these options. I think a lot of people have been growing up in this world where they're just sort of like expect to do all these great experiences all the time. And sometimes there's this delayed gratification that almost seems like a lost concept today, right? But I would argue to you that, you know, the experiences also are often more meaningful when you do kind of wait for them and save up for them there. So just be very sensible. You know, restaurants can be incredibly expensive right now.
Oh, sure.
It doesn't mean you have to go to the fanciest ones or that you can't cook at home and things like that. A lot of common sense.
You probably have this conversation with your 23-year-olds, and I've got grown children as well. And so, you know, you get into a discussion and you start talking about, you know, where are you supposed to go to find some kind of peace? There was a time, you know, when people didn't think that much about money. I listened to an interview with Jerry Seinfeld recently, and he was talking about the 70s. He said, you know, we didn't think about money. We just wanted to have a good job and have fun with it and enjoy it, and the money would follow us. But he said, I find a lot of young people are obsessed, you know, with money. And for a reason, because, you know, everything is expensive. Yeah. And they have a difficult time trying to figure out where they fit in. Do I go after the money? Do I seek the dollars? Or do I seek some sense of purpose with my life and enjoy my career and do what I want to do? It's kind of a difficult balance between the two.
Ernie, you're really touching on a really important topic. We could go on for days on. Sure. I think there's a few things going on here. One, I do think that you're right. There is sort of in many parts of society, there's sort of a bit of a money obsessed culture, and maybe it's because of social media and the internet, and you're just seeing all these things, you know, shoved in your face about, like, you know, some guy or some girl who's just got this amazing job, or they're jetting off someplace, and we didn't have that in the 70s, right? Like we had 4 channels of television.
That was it. Or you're able today to create something.
Yeah.
Okay, you come up with something, and they pay you $1 zillion,
yeah.
and you're 24 years old, and you can retire.
Look, when I was a kid, we played board games, which cost, today's dollars, $19, right? I mean, good luck to me trying to get my kids to break out Monopoly again. I mean, they do it. They play it there, but that was like high entertainment for us when we were kids, right? And now I think you stare at your iPhone, and the iPhone takes you to all these magical places, and it creates little teases in a way, like, oh wow, this is amazing. I really got to go down to Peru and check out these mountains or this amazing food or something like that. Well, you and I never thought about that when we were kids, right? So I think that's part of it. I think all this, I call it optionality, right? You see all these potential options out there for you to spend your life, but having all those things on all those options presented to you creates the anxiety, right? So, you asked me, like, how do you get to your calm, peaceful space? Turn off your phone, leave it at home, and go for a hike or something like that, or a bike ride, or whatever you like to do.
Find a break someplace.
Get disconnected from it. We all do it. Like we all are slaves to our phones to some degree. But if you can break it off and separate it, it's a good thing.
You probably hear this too. There are a lot of young people that I talk to, and many of them, 22, 23, whatever, are saying, even younger, I kind of wish that I lived in your time. And I say, why? Because you know what? The phone is good, but it's too much. It's social media, internet, all of that stuff. We don't stop. And I think I would love a simpler life. There are a lot of young people that are tired of all of this because it's a lot of work and it's a lot of pressure, and it can cause a lot of anxiety and a lot of depression. It can create a lot of serious problems.
100%. I think there's a lot of studies on this, that social media companies are basically engineering their algorithms to be addictive, just in the way drugs or alcohol or cigarettes can be addictive. That's not good for, and of course what happens is that, these kids start on these addictive programs or platforms early in their life, right? The complication, of course, is that there's a lot of great things on the phone too, right?
Sure.
So, it's hard for me to do my job at work without my phone, right? To me, it's I'm always receiving some information I actually need to do my job, believe it or not. But of course, for every good piece of information I get or that's truly useful to my life, there's 9 things that are just taking me down a rabbit's hole to nowhere, right? And it's very hard to separate those rabbit holes from the good stuff, and that's part of where we're not going to get rid of iPhones and YouTube
that's not gonna happen.
And any of that stuff, right? But
I'd like to find a way. I'd like to see that there may be ways, and I don't know whether AI is going to do it. A lot of people talk about artificial intelligence. What impact is that going to have on everything?
Yeah.
But I just thought of something. You talk about escalation. Talk about inflation. 1973, I was working in Boston, and I did a television show called Winning a Million in the Massachusetts Lottery. 1973. Winning $1 million in the lottery was huge money. It's $1 billion today. Yeah. Michael, I mean, really, it's out of control sometimes. I look at it and say, where are we going? How far is this thing going to go? I don't know.
Well, look, I mean, I think if you look at the history of money, or certainly the dollar, like think about, like I use the pizza slice, right? When I was a kid in 4th or 5th grade, a pizza slice cost 25 cents, right? For the exact same product, probably not as good as it was back then.
Sure.
In terms of the quality of the ingredients, right? There's, I don't know, what, $3 now, or something like that.
At least.
And it's going to be $6 down the road, and it's an inevitability. I mean, I think
even fast food, regular fast food restaurants, people are going in there with a family of 4,
and coming out with a $65 bill.
At least.
Yeah,
it used to be a quarter for a hamburger.
I don't, but I have noticed some of the big chains like McDonald's have just started this like $5 meal. This discounting for the first time. Yeah, sure. It's actually a really interesting tell about where the consumer is going, is when the big companies are now really starting to advertise price discounts there. So let's hope we get them there. But yeah, look, there's a structural. Nixon took us 1971. We went off the gold standard.
Sure.
Their commodity inflation, oil, soared. The dollar got really weaker. The dollar is still the world's reserve currency, but that doesn't mean it doesn't have long-term structural debasement. As we call it on Wall Street, with it, where the dollars is going to, you're going to mean more dollars to buy the same product, whether it's a piece of pizza or a lottery winnings, or for that matter, look at what college costs back then. Academic inflation's run 4% above regular inflation, I think, for 50, 60 years now, right? Now you're talking about huge sums, to go to a college, right?
Let me ask you this, because I mean, you deal, with a lot of finance at a high level. By the way, let people know what you're doing. Talk about a little bit about your company.
So I have my own research firm. Yeah. I do basically macro research for institutional investment clients.
What's the name of the company?
It's called Tallbach & Capital Advisors.
Okay.
There you can reach out to me on LinkedIn, or if you happen to have a Bloomberg terminal, if you're in the business, as it were, you can find me on. You can find me there as well. There. So I provide sort of a cross-sectional view of what's going on with the major asset classes, the stock market, interest rates, the 10-year interest rate, the 2-year interest rate, what's going on with the dollar, what's going on with some of the foreign currencies, what's going on with commodities, and how all these different things, these asset classes, all impact each other, because they're all connected, right?
Yeah. So you deal at a much higher level. I mean, we're talking about, everyday finances, which is very important to me. I think that's fundamental, and I pay a lot of attention to that. But I want to talk to you about money for a minute, because this subject has come up often. A lot of people think that we're so money driven, particularly people who really have high income and high asset values. Is money the source of evil? Does it really change people that much? Do they become addicted? You mentioned the word addicted before. Do they become addicted to money? Do they end up abusing it? Do they end up having a distortion of what life is about, where their values are?
I think that's a really, really important question. In my travels, I have been exposed to every facet of society, from very, very, very low-income people to some extraordinarily wealthy people. And one of the things that I've always observed among the very wealthy is that often they feel poor, because it's a game of competition. Okay, sure, they can afford nice things and a nice boat and a huge house and a second huge house and a third house, but there's always someone next to their fancy house in the Hamptons. There's always someone next door who's got a bigger and fancier house, right? You never quite win this game, right? There. So if you define yourself, if you are fortunate enough to have a lot of financial success, the question is are you going to be defined by these physical objects or not? Like, to my definition of luxury is having optionality. And what I see among some, not all, but some very wealthy people is that they have less optionality, because they're just defined by what house they have, what car they have, whether they're going to fly first class or private or business class, right? There, and if you're confined,
so shallow in my opinion,
it gets frankly boring, and it's less interesting there. It's obviously great to not have to worry about how to pay for your kids' education and making your mortgage payments, and that's a huge benefit. But I think a lot of these people are not. A lot of them need a mission beyond just whatever drove them to their financial success there.
When I think about people who have, great wealth, to me, one of the best things that I can see in a person is someone who has been successful, but they never forget, where they came from, their roots, the basic values in life, and who become philanthropists. To me, I think if you have a lot of money and you're able to give it, and see the good that you're doing, not just write the check, but be able to go there physically and find out, are you helping children? Are you helping the elderly? Are you helping the people who are disenfranchised? Are you doing something good with your money? To me, I admire people like that. But when you're talking about that shallow mentality of, I own this or I own that and I have this, to me, I think that's so useless, because, there's a great line. That person is so poor, all they have is money. And there's nothing left.
That's brilliant.
Isn't that a great line?
I love that. Yeah. No, and look, and in some parts of that highfalutin world, they'll write checks to charities, but they're, again,
they have to.
They becomes a they have to. It's a tax deduction, but it's also they're playing a social game there, and it's like which board are you going to be on and all that kind of stuff. there, as opposed to having a real. I mean, look, it's great they're writing the checks, but is their heart and their brain really in it, right? Do they really care? I think there's some families, some very illustrious families, throughout our country's history. The Carnegies, Andrew Carnegie being an example. There's others where they really go out of their way to they had a mission, right? Like they needed to change society by building steel mills. Of course, Rockefellers did that with Standard Oil and all that, but they also became extraordinarily committed philanthropists. And today you think of Carnegie not as in terms of steel, but in terms of what he's done at Carnegie Mellon and that's great. And all that. And you think of the same thing with the Rockefeller family as well.
Yeah. I'm going to ask you to call on your wisdom and your experience in the world of finance, and just as a parent and understanding life at your stage, and my stage as well. I always ask people, if you had to give a newborn baby a piece of advice, something that you'd like to say, this is what I know, this is what I would like to share with you, so you could look at this someday when you're a little older and you can understand it, and you can utilize this information that I'm giving you. What would you draw on, Michael Purvis, to say, I'd like to give a newborn baby this advice?
Well, that's a big question.
That's a good question.
I guess, okay, so, don't get an iPhone, until you're out of diapers now. But, no, but more seriously, I think it's just really important that to just always be your own person and to think about what's truly important, what sort of concepts or philosophies you want to live by that will define your life, because you will have ups, you will have downs.
Yeah.
But those things are always constant there. So if things don't go your way sometimes, and we've all had those parts of our life, right? There, it's okay. That doesn't really matter, right? If I get laid off from my job or something doesn't happen right personally or what have you, you have a belief system on really trying to help. In my view, like if you can cling to the idea of let's help the world get to a better place.
Sure.
It's a very high level thought, but it's a good one, and you just keep to that.
It's good advice.
And every day on planet Earth is a great one, and work it out there. I also think that it's to me I like work, right?
Me too.
I just turned 60. I'll die with my boots on. I think it's important that, particularly when we're dealing with this whole when do you retire thing and financial security issues there, that this is a little bit more sort of career specific, I guess, not for the baby, but later on that figure out something you can do with your life that will pay you an income that you actually really enjoy. Now, I found that, and
that's great.
There, I think you have too.
Yeah. We're lucky.
We're lucky. But work towards that,
Yeah.
and then as I think there was someone that came up with a saying that if you love what you do at work, you're never working, right?
Because
you're just doing what you want to do.
We're always looking for that continuation.
Yes.
And you talk about young people. Carl Sandburg had a great line. When you see a newborn baby, it's God voicing his opinion that the world should continue.
Yes, I like that.
And that's what we want, a continuation
exactly.
of life. We wish everybody good luck. Michael Purvis, you're a great guest. Congratulations. You got a podcast too, by the way.
Yeah, just started my own podcast with a business partner, Josh Silva. We just talk about very kind of nerdy topics about the markets and equity volatility, but you can find it on my LinkedIn profile, or it's called the Macro and Volatility Podcast. You can find it most probably on any of the platforms that you find podcasts.
Good luck,
on.
Michael.
Thank you,
All
Ernie.
good things. Good luck to you and your family as well, all right? Stay positive always.
Indeed.
Thanks for watching, everybody, and we'll see you next time. Bye.